In this video, we are going to be analysing Rite, ticker RAD. So to get straight into it, we can see Rite is down over 27% this Thursday. Now, why is this? So they have just had their Q2 earnings. It did miss expectations. Now, this is also key in why we're also seeing stocks like Walgreens Boots Alliance and CVS starting to decline in price. And that's just because really, if even places like pharmacies are not even being able to beat their forecasted profits, well, really it's just showing how much or how little disposable income have. And again, this could be to many things. Maybe obviously inflation being a key one, but also interest rates. I mean, a lot of people are homeowners and their rates are going to be getting more expensive. So some people are anticipating that, or they've already had their increase in mortgage payments. So really, it's a key thing to see, and more the macro side of the economics. But it is just getting more and more harsh out here for the equity side of things. But to get into the direct levels for Rite, what are we paying attention to? So we can see we have fallen down to around $5 as of now, and we do have our first standard deviation channel at $4.75. And that is the first deviation on the 6-month chart. So we got close there but weren't able to quite hit that, and really that would be our first level of support. So if you were looking for a long play on Rite, this is where we maybe start to look scaling in. And what we can see is also this is very close to that 52-week low at $4.68. Going lower than here though, we do have standard deviation levels at $3, $2.50 and final levels at $1.20. But really, that is very far off from where we are now. And even if earnings do continue quite weak and we are pushing more into a recession, the likelihood of pushing down to $3, at least in the near future, is probably not actually all that much. So really the key focus I would be paying more attention to is the psychological levels. So that would be $4, $4.50 and $3.50 as kind of those key levels that are not standard deviations. But obviously if we do fall and we fall down to those $3, then this is definitely a good buying opportunity if you were looking to get long on Rite. Now on the other hand, if we start to bounce on Rite, what are key levels? So we do have two statistical means, one at 550 and one at 650. Now these are key because while we're below here, we are actually a tiny bit oversold. Usually we expect stocks to reverse to this level, and that's why when we push to these upper levels, we did analysis on Rite, said we were more short bias on it, and we traded it to the short side back to its mean. Now we're still quite close to this statistical mean, so probably not something, if you're looking at it as a trading perspective, probably not the best time to be going long. We'd probably want to see it fall in price a bit more, but really these are the levels that we're looking at more for reversal, but not tend to be ones that we look to trade. So if we're actually looking at more levels we can trade, we're going to be looking at around the 840 to around 825, because these are our first deviation on both the 6-month and the 1-year chart. Now you can use this level in two ways, or two key ways, and that's going to be if you are playing the stock long, meaning you're buying it, whether that's trading or investing, we could be using the 825 as a key target. But on the other hand, if you are a long bias only trader and you want to trade in the direction of momentum, then what you can do is wait for a break over this 840, and then you want to see the retest. So break over, come back to retest it, and if that level can hold, then that gives us confirmation that more than likely we're going to continue up. And where would that next target take us to? And that would be $10, which is our next statistical level. If we break that, we're then looking at 1130, 1180, and final levels taking us to 1350, 1425, and a final level at $17. Obviously, some of these are very far off. If you're looking at the upside at $17, down the side $1.20. Now, you don't have to pay attention to all of these levels. Really, just pay attention to the ones we are closest to. For example, downside, we're closest to 475. So if we're looking to trade downwards, what we want to see is a break below 475, come back to retest it, and if selling pressure kicks in, more than likely we will continue down to at least the $4 mark. But also, this is key to note, because if you are holding the stock long, we break below 475, come back to retest it and fail, more than likely it's better to cut your losses there and then just look to get in lower once there's a new support level. And on the other hand, if you're paying attention to the upside, Okay, you only need to be paying attention to the 825, 840. You want that retest, come back to hold it, and if it can hold, then pay attention to the $10. You don't have to be paying attention to the higher levels, and you don't have to think they're going to get to there. All you want to see is a confirmation on these trades, and if we break a level, then we expect to push to the next one. Anyway, I hope you enjoyed the breakdown on Rite. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.